Hello folks, Sid Miramontes here with Miramontes Capital. Many of you have been asking me lately about your lump sum pension and how it's affected. Well, one thing you need to be aware of is interest rates have been moving higher here the last couple of months. Interest rates just moved up here just recently, and about a month and a half prior to that, interest rates were moved up again by the federal government. And as we're looking forward from the analysts are projecting that we're going to see another rate hike maybe before the end of the year and a couple rate hikes into 2018. So what does that mean for your pension? Well, many of your pensions are based off of three things: the interest rate, your income, and your years of service with your company. Well, the factor that we have to be most concerned about right now that's going to be most affected, is what it looks like, at least currently, is the interest rate. If the interest rate continues moving higher, many of your pensions will be affected negatively by the values. If you're taking the lump sum pension, if you're taking the dollars out of your pension and rolling them over to a retirement account to live off of, because you want your beneficiaries to be the beneficiaries of that those assets, to receive those dollars, or if you want to pass those assets on to your loved ones, your children and grandchildren, well, many of you are looking at taking those lump sum options. But those lump sum options are affected by what's happening with the interest rates. So interest rates do affect those dollars, and they'll affect it negatively as the interest rates move higher. But of course, if interest rates go lower, then of course that affects your pension positively. So right now, where we are in what we expect to be a rising interest rate environment, where interest rates are starting to move higher, your pensions are going to be affected negatively. So make sure that you're keeping track of when that interest rate is going to move higher and how it's affecting your pensions. Some of you work for companies where the interest rates are raised every single month on for your retiree pensions. Some of you work for companies where interest rates are affected every quarter. So if the interest rate is raised today, it's not going to be effective for another 90-day period of time. Some of you are affected where if the interest rate moves higher today, well, next month the interest rate will be affected. And some of you are affected only once a year, where, hey, even if their interest rate goes up a couple of times this year, it's not going to be effective until January 1st of the following year, so you're covered for this particular retirement year. So those things are things you want to be aware of and make sure you pay attention to, folks, because it's big dollars. That money's got to last you for the rest of your life, and you want to make sure you protect it. So with those or any other questions on pensions and interest rates, we look forward to your time. Thank you.